Have you ever scrolled through property listings and as you're scrolling along, you see a beautiful oceanfront condo that looks amazing, but the price is only a third of what you would expect? And you look at the pictures and everything is lining up, everything's looking great. And then you start wondering, wait a minute, there's gotta be a catch. And usually, you're right, there is a catch. And that catch can typically be summarized in just one word: leasehold. When I talk to clients, one of the most common questions that I get is about leaseholds. So I decided to make a video on this topic and dive into it and explain what it is, how it works, why it exists, and what you absolutely need to know before you buy a leasehold property on Hawaii. Here in Hawaii, there's primarily two types of real estate ownership. There's leasehold and there's fee simple. Fee simple is what most people are used to. When you buy a property, you own a piece of land and you own all the structures on it. You can live there, you can rent it, you can sell it, you can pass it on to your kids, it's yours. Plain and simple. Hence the name fee simple. Leasehold, on the other hand, is a little more complicated. When you buy a leasehold property, you're only buying the structure, a house or a condo, but not the land underneath it. The land you are basically leasing from the landowner for a period of time. At least this is the official definition. And I find that a lot of people get confused by this explanation. An easier way to explain it would be that a leasehold is basically a very long rent. So on normal rentals, if you're renting a house or a condo, a long-term rental would be either 6 months or 1 year. With a leasehold, that could be 5 years, 10 years, or however many years are left on that leasehold, which I'll explain a little bit more later. A good comparison to a leased property is a leased car. So when you lease a car from a dealership, they give you the car and ownership of that car temporarily. So you use the car, you're paying for it, but in 3 years, you have to give it back to the dealership. It's pretty much the same thing with a leasehold property, except the timelines are longer and the prices are much larger. But before I dive deeper into this and give you some real life scenarios, I want to go a little bit back and explain where this came from and how leaseholds came to be. Leasehold ownership in Hawaii started back in 1848, when Hawaii transitioned to the private land ownership. Large portions of land were retained by trusts and estates, like Kamehameha Schools, formerly known as Bishop Estate, the Queen Emma Trust, and other large private landowners. Rather than sell their land outright, these entities lease it to individuals. That allows them to keep ownership of the land while still generating income for these lease payments. So if you buy a leasehold property from one of these trusts, you're actually buying the right to use this property for a certain amount of time. And when these leases were originally written, they were usually written for a very long period of time. Anywhere from 30, 50, 75, or even 99 years. What matters the most for buyers and lenders is how many years are left on that lease. Just like a normal rental property where you have one landlord but you can have multiple renters cycling through. So one renter can be there for 1 year, the next one for 2, the next one for 5, and they cycle through. It's the same way with the leasehold property. So if the lease is for 99 years, that doesn't mean that the same family will be there for the entire time. Maybe they bought this lease when it had 99 years left, they lived there for 20 years, and then they sold the remainder to somebody else. As the remaining years on the leasehold shrink, the value and the financing options on that leasehold shrink as well. If you want a bank to finance the leasehold mortgage, generally the banks are going to want to see that the lease is longer than the mortgage, which means that the less years there's left on the leasehold property, the less financing options there are. For this reason, leasehold properties that have under 10 years left are usually bought with cash only. They're typically not financed. And I wish that was all there is to it, but there's more. Aside from the initial payment, whether it be a cash payment that you initially paid for the leasehold property or you financed it and you have a mortgage, there's also renegotiations that happen, and there's ground rent. Ground rent is another fee that you pay the landowner for using their land. For condos, this fee is generally anywhere from $300 to $700, depending on the size of the land and the condo. And for houses, because they're larger, this is usually somewhere from $700 to $1,200 a month. And of course, with most condos, you also have homeowners association fees, which can be pretty high as well. Leases also typically contain rent renegotiation clauses, which means that every 10 or 20 years, the contract is reviewed, and according to the market rates, the rent may be raised, and usually it's raised substantially. That rent increase can drastically change the monthly payment amount and decrease the attractiveness of this leasehold property if you were to sell it. Now, let's talk about what happens when the lease expires. Let's say you buy a leasehold property that had 5 years left on it. 5 years later, that lease expires, and there's one of three things that can happen. Number one, you renew the lease, you renegotiate and you renew it, and you get to stay there. Number two, if there's a clause in there that allows you to buy the property, you may be able to buy it fee simple. And number three, if the owners do not want to renew the lease, then the property ownership reverts back to the original owners, and whoever is living there has to move out. I mentioned earlier that you can resell a leasehold property that you bought, and I want to talk a little bit more about that and what that would look like. So for example, let's say you buy a leasehold property that had 20 years left on it. You lived there for 10 years, and then you decide to sell the remaining 10 years to someone else. Whoever buys the property is going to have to inherit the same exact lease terms that you signed up for. Basically, they're buying the leasehold property as is. Same rent schedule, same renegotiation, same expiration date, the clock does not reset, everything stays the same. Another thing to keep in mind is that even though you can resell the leasehold property, oftentimes you do have to get the approval of the landowner before you can do so. Financing will probably not be available for potential buyers either because there's only 10 years left on that lease. And the last thing to remember is that the less years that remain on that lease, the less attractive the property is for potential buyers, because they would be spending a large amount of money for only a couple of years and then have to give that property back. So the bottom line is, yes, you can sell, but expect fewer buyers, likely it's going to be a cash offer, you will need the landlord's approval, and a reduced sales price as the lease shortens. Because of all these drawbacks on leasehold properties, the good thing is that they're usually a lot cheaper than fee simple. So for example, if you have a fee simple property that is worth $600,000, if this was a leasehold property with 30 years left on it, it would probably be worth about $300,000. So with all that being said, does it ever make sense to get a leasehold property? And the answer is yes. People do buy these leasehold properties because it does make sense for them. So if they're looking for a second home, a vacation property, or if they only want to live in Hawaii for 10 or 20 years, this is perfect. They only have to pay half of the price they normally would have had to pay, and at the end of their term, they simply just give the property back and they're okay with that. But for those of you that know exactly what they're getting themselves into and you want a leasehold property, I made a due diligence checklist that can help you out as you're shopping for a leasehold property. There's 9 things on this checklist and I don't have them all memorized in order, so I'm just gonna read them to you. The very first and most important thing you want to confirm is how many years remain on that lease. Number 2, when is the next renegotiation and how is it calculated? Number 3, is there an option or right of first refusal to buy? If this clause is in the contract, that means that if the landowner ever decides to sell this leasehold property, you're going to have first dibs on it before he can offer it to someone else. Number 4 is, what are the landlord's approval requirements for sale or transfer? This one is important because if you decide to sell this leasehold property down the road, there might be some requirements or clauses in the contract that make it very difficult to sell the property. So you definitely want to review the leasehold terms and make sure there's nothing unreasonable in there before you sign anything. Number 5, who pays for property taxes, insurance, and common area maintenance? Number 6, has the landlord historically raised rent, and by how much? Number 7, if you plan to finance, will the lenders finance this lease? If so, what minimum remaining term do they require? Number 8, what happens to improvements when the lease expires and they don't renew it? So this is important as well, because if you're going to be doing some kind of improvements that you can take with you when you move out, you want to make sure that's in the contract. Some contracts don't allow you to take anything out of improvements that you've made to the property when you leave. And finally, number 9 is like taking a used car that you want to buy to a mechanic. So if you find a leasehold property that you want to buy, it's a good idea to take that contract before signing it, bring it to an attorney or a lender and have them review it before you go ahead and sign it. And that is all I had. Next time you're looking at properties and you see a dream home in Kona that is listed for way lower than you would expect, most likely that's a leasehold property. But if you find one that you really like and you want to understand the details of what it means for you if you buy that leasehold property, reach out to me and I would be happy to walk you through it.